Hey everyone, welcome back to your weekly market outlook. This is for the 27th of October 2025. Obviously, we are wrapping the month of October. 2 months left in the year of 2025. All right, let's just jump in, and we finally have something. Obviously, the US government still shut down and whatnot, but if we take a look at the release last week, we obviously have the inflation numbers from the US. This is just one side of the picture though, because we're still missing the labor numbers there from the US. But if we take a look at the inflation numbers here, it wasn't as high as it was expected to be. Because if we take a look at the headline inflation number, it's expected to go up to 3.1%. It did went up from 2.9%, but it's not really as per consensus or anything like that. In fact, everything comes in below consensus, slightly below consensus. Doesn't mean that inflation is not rising. It is still rising, and inflation has now hit 3%, which is kind of the critical levels there for the FOMC. But yeah, interesting to see here in terms of the market reaction. Obviously, everyone is kind of eyeing for a weaker US dollar at this point in time, more of a dovish FOMC, considering that the inflation is not as high as what the market is expecting. Now, that's from the US side of things. On the other side of the world, obviously last week we also saw the release of the UK inflation number. And the UK inflation number there, it was actually flat at 3.8%. It's still pretty high. It's relatively high, but it didn't hit the 4% mark. So, that kind of just leaves a little bit more of a room for the Bank of England to not do anything, or at least kind of need to start thinking about tightening monetary policy at this point in time. So that was last week. And if we take a look at this week, don't forget daylight savings. I think pretty much across the globe there, except for the US, at this point in time has shifted to daylight savings. So make sure to adjust your clocks for the data releases. But yeah, what are we looking at this week? Obviously, interest rate decision from the FOMC. We're not expecting a 25 basis points cut. I think this is done deal at this point in time. This is already mentioned by the FOMC during last cut from the FOMC. That yeah, they do expect one or two cuts in 2025 and then another one in 2026. So I don't think this is actually going to be a huge surprise or anything like that. This is currently pricing for a 25 basis points cut. That's going to be on Thursday morning if you're in Australia. That is. It will still be on Wednesday in the US, but yeah, it'll be out Thursday morning, very early in the morning in Australia. 25 basis points cut, that's expected, and whether or not the market has already priced it in, I believe that the market has already priced in for that 25 basis points cut from the FOMC. At this point in time, we're not expecting a surprise 50 basis points or anything like that. We just don't have the data. The FOMC just doesn't have that data to make that kind of move at this point in time. All right, Bank of Japan interest rate decision. This one here, I don't expect any changes from Bank of Japan. Again, they're not in a situation to be able to start hiking interest rates, so we'll see what happens here. But yeah, not expecting that to happen. FOMC is definitely going to be on hold, and Lagarde has already mentioned this last week and the week before that yeah, they might actually hold for the rest of 2026. Then they might not be doing anything. They might not do a rate cut. They probably won't be doing a rate hike. As long as the current economic condition doesn't change, they will likely keep rates unchanged for 2026. So I don't think this is actually going to be anything of an eventful move in the market there. All right, let's just jump in onto the technicals. Aussie USD here. Obviously, we're looking at a jump up this week for the Aussie. Risk assets are back. Talks between China and the US, that's pretty much resolved. And Trump basically just posted that in terms of the tariff, they're not going to go for that 100, tit for tat 100% tariff there. In fact, China is actually charging the US 50% for tariff, and everything else from China is now at 10%. Not quite sure about the specific of the details yet. We don't have a clear read on the framework agreement, but one thing that we know is that on rare mineral earth, which is basically what the US is aiming for, and something that that's basically the trump card for China there. China's just going to charge the US 50% there, and in return, the US is going to give China 10%. So I think this is a win for China at this point in time. At least, that's out of the way, and we can see risk assets rallying up there. We can see that, obviously China on the winning side. The Aussie benefits out of this, and you can see the Aussie made that jump there from 65 cents last week, opening up the week with a gap a little bit higher. At this point in time, if you take a look at the Aussie there, is there anything significant? I don't think so. I think this is a pretty stable currency that we can see here. But yeah, ranges 67 to 65 at this point in time for the Aussie, time of recording. Now, next let's take a look at the Euro. Euro is recovering well. It's not really off that order block that we have there. It kind of pierces through that order block, early in October, kind of recovering it. And so far, we haven't seen any break back below that level there. So we have seen a sustained price holding above 1.16 on the Euro. And I think this is going to be the key level to watch out for on the Euro, which is 1.16. So yeah, we'll see what happens here. Obviously, immediate resistance is going to be at 1.17. Once we clear off 1.17, then we don't actually have a lot of resistances until 1.18. But yeah, this is recovering pretty well. Unlike the sterling, which is really having a hard time here, to try and recover. It's stuck below 1.34. It's barely managing above 1.33. It's in a very, very tight range at this point in time. So this week, the main focus is whether or not the sterling is actually able to recover above 1.34. If it's able to recover above 1.34, then it doesn't actually have a lot of room to go, because there's an immediate resistance that's a really tough one at 1.3450 and 1.35. So this is not a good place for the sterling in terms of, a lot of sterling bulls probably thinking, it's time to buy. We can hold on to it and it's going to rally up. We are just not quite sure about that at this point in time. From the technicals, it does point for a slightly weaker sterling against the euro as well as the dollar. So just be a little bit more cautious here whether or not this bounce is actually sustainable on the sterling. All right, finally we have the dollar yen. Now, obviously, with what's going on with the new prime minister there, pro Shinzo Abe, basically the next Shinzo Abe, Shinzo Abe has been training her. And if we take a look at her stance there, she's kind of weird in a certain way. She's more dovish on the economic side of things, a little bit more right-wing on the political side of things. So it's very contrasting. But the market doesn't care, right? As long as it's being dovish, I don't think the market cares much. So the dollar yen still has room to go. And if we take a look at the formation here, we do see a little bit of profit taking happening on the dollar Japanese yen, but pretty much sustainable above 150. We didn't actually see a close below 150. We saw price hitting 150 immediately. People just scoop it up again. Mid-October. And right now, currently testing about 153. Any break above 153, there's actually not a lot to hold this. Remember, we talked about this before. The Ministry of Finance, the older Ministry of Finance, we don't know whether or not we're going to get a reshuffle or anything with the new Prime Minister. But yeah, they're eyeing 156 before any potential intervention there. So a lot of room to go, especially if this one comes back to 152, 151, bounces off again. People might scoop it up again. Once it clears off 153, there's actually not a lot to hold it off. And with the current patterns that we have here, this is like you're going to be forming an ascending triangle. And obviously that's going to be a continuation pattern. What we need to see is a break of 153.25, which is kind of the barrier for 153 on the dollar Japanese yen. So yeah, still looking good. Very strong uptrend here for the dollar Japanese yen. All right, so that's pretty much it for this week and this month. Good luck with trades, and I'll see you next week.